Hi, this is Binu Joseph from Inditrade. The Indian markets are likely to go through another week of increased volatility as efforts to settle the US budget dispute in Washington drag on. The market will closely watch some domestic economic data followed by the Infosys Q2 numbers. From the economic data side, the trade data for September will be announced by Commerce and Industry Ministry on Thursday. India's trade deficit narrowed to $10.9 billion in August due to 13% rise in exports. In August, it was the second straight month of year-over-year increases in exports. If the deficit comes in single digit, it could be the positive outcome of the government efforts in last few months to reduce gold imports. The August IIP data will be out on Friday. July IIP data was at 4-month high, and this month market expects a good number as the core sector growth in August was at 7-month high. The IIP and balance of trade data would determine the currency direction and will influence the very short-term stock market movement. Infi Q2 earnings on Friday will be the next major trigger for the market. Expectations are high from the earnings season for the IT sector as currency depreciation was 11% in Q2 and significant improvement in the demand environment for the IT services from developed markets. Infosys expect dollar revenue growth to be around 2 to 2.5% in the quarter. In last 3 months, Infosys stock price moved up by around 25%, and now it needs some strong reasoning from the market, from the numbers and their future outlook. The sentiments in the counter could improve if the company revises its FY14 dollar revenue by at least 1% on the upside. The global markets are going to remain completely occupied by the political news from US until it is resolved. How the politics out of Washington impact the Indian markets? Last weekend, we had a 250 points pullback from 5,700 levels, more than many people expected. It was due to the thinking that if the decision on US shutdown gets prolonged, the Fed is likely to push the tapering even further than December. US government is highly unlikely to default, and it is widely expected that a compromise formula would be worked out. The US Treasury said in a report on last Thursday that if there is no resolution before October 17th, could plunge the United States into deep recession and rock global markets. It is not likely, but it is a remote possibility. The big fear is that US government default has not been discounted by the market, as the market reaction has been orderly so far. On the other hand, if the US deadlock gets over and US starts paying its debt, then there could be a relief rally kind of thing in the market. A technical view. The Nifty could move in a sideways manner in the downsloping rectangle during the week. The momentum indicators do not show any change in the trend. The RSI at 56 has been consolidating, and MACD is not giving any major indication. The slow stochastic is in the positive direction. The critical support level for the benchmark is at 5802, and On the upside, it could face resistance at 5996 level. The markets will wait for the cues from the macro data on Thursday and Friday, followed by the Q2 result of Infi, to take a clear direction. The major resistance above 5996 is at 6091 level. However, if Nifty closes below 5802, if it breaks below this chart formation, then it could turn the sentiment down. The first support is at 5674, followed by its major support at 5578. Thank you for watching the video. Disclaimer.